Hello there. Welcome back to Grade 12 Accounting. Today we want to look at the common test of March 2024. So we are going to look at question 3 on the question paper of March 2024. So our question has got 20 marks, and the question to spend on average 20 minutes on question. The question reads, in this question is of South Limited. You are provided with information relating to South Limited for the financial year ended 29 February 2024. South Limited issued new shares to the existing shareholders at 850 cents per share. Then we can just take note of the share price that we have, which is 850 cents per share. And on the required part, it reads 3.1. The directors are happy about the liquidity of the company. Quote two financial indicators with figures to support this statement. So obviously, in terms of this question, the first thing that we are supposed to do, you should be able to identify the liquidity financial indicators that we have. Remember, liquidity just is described as the ability of a business to meet its short-term obligations. That's for the availability of cash in the business describes liquidity. So basically, we've got various liquidity ratios that we can try to look at. We can have the current ratio. We can look at the current ratio. We can look at the asset test ratio. We can look at the data collection period, this rate of stock change. So those are some of the financial indicators that you can include. But within the context of the question that we are looking at, you can just go there and try to see which liquidity ratios do you have. But if you look at our question, it says quote two financial indicators with figure to support the statement, and statement says the directors are happy. So if they are happy, it means they have to be favorable liquidity ratios. So the liquidity ratios that you are going to pick, they should show an improvement. So basically, that's what we are trying to say. So you go to your answer section and you try to see according to the ratios that we are given. So these are the financial indicators that we have. So within the financial indicators that we have, which one are the liquidity? In financial indicators is the question. It's here. Liquidity. Financial indicator. We also have creditors payment period. We got rate of stock tenor. So those are the ones that we are seeing that we have in our question. So you can try to identify which one are showing an improvement. So let's start with the data collection period. We have got a movement that we have from 20 days. This is the previous year, and this becomes the current year. So on data collection period, we are saying the previous period, we had 20 days of data collection period, but in the previous period, we got 30 days. So we are seeing that, remember, we are saying the data collection period should be lesser days. We should have lesser days to show that it's improving. But if it's within the prescribed number of days that we expect the data to pay, it's also regarded as an okay ratio. It will be a fine ratio. But as long as it's within the period that we expect to receive our money from our debtors, it's a fine ratio. But if you are given a comparison, maybe you're given two ratios with a number of days, it means that one with lesser number of days becomes a favorable financial indicator. So in this case, we are saying it's a movement from 20 days to 30 days. So 30 days, it's within the expected number of days that debtors are expected to pay, usually 30 days. So it's also okay in the period it is. So in this case, we can mention the data collection period. So on our answer section, we are going to say, remember this is our 3.1, and we are saying we have identified the data collection. So we are saying on the first point, data collection increased or improved. We just say it's increased from 28 days. 28 days to, if you refer back, would say that it's a movement from 20 days to 30 days. So I'll say 20 days to 30 days. And it is still within a month. So with this description, we violated that if it's still within a month, it's still in the required period. So basically, that's what we have in terms of data collection data collection period. So here we go to the next financial indicator that we can use to describe the issue of the liquidity. Stock chain it's a movement that we're able from 3 times to 5 times. So rate of stock chain, remember, is it measures at the rate at which stock is coming in and moving out of the business. So the quicker it moves out of the business, the more liquid the business becomes. So it becomes, so it means the one with the higher rate of stock chain is a favorable position. So we're having that it's an increase that we are experiencing there from 3 times to 5 times. It means our inventory is moving out of the business at a quicker rate. So basically that becomes a favorable position. So we are going to also include our rate of stock chain. So if you go back to our question, you see that our question requires 2 financial indicators. So we've now identified the second one, which is rate of stock chain. So here we are saying on the second point, we're saying rate of stock turnover, rate of stock turnover improved from 3 times to 5 times. That is by 2 times. That is by plus 2 times. And you can calculate the percentage increase from 3 to 5. We're saying by 2 times. So if you say 2 over 3 times 100 over 1, you're going to get 66.66%. So by 2 times in brackets, it's 6.66%. So you remember you are supposed to quantify the change that is taken place. So this is the second financial indicator that we have identified. So you go to the second part of the question, saying shareholders are satisfied with the issue price of the new shares. Quote 2 financial indicators with regards to support this statement. So remember the issue price we are given each year at the beginning of the question when saying South Limited issued new shares to the existing shareholders at 850 cents per share. So this is our issue price, 850 cents. So obviously we need to when you have a question that is asking you on the issue price, we have to compare the issue price with the market value of the shares and also the net asset value of the shares. So obviously the issue price has to be above the net asset value and also has to be above the market value per share to indicate that it's a favorable position. So for shareholders to be satisfied, it means the issue price 850 cents should be above the net asset value and the market value per share. So we go to our question to try to identify about that. Remember, I was saying it's 850 cents, so we go to the net asset value and to check at the recent financial indicator of net asset value, which is 695, which is below the issue price, which is a favorable position. We go to the net that we are looking at, and then we go to the market price now per share. We try to we have got a year market value per share on the Johannesburg Stock Exchange. It's 810 cents, which is again below 850 cents that we have for the issue price, which is here, which is also a favorable position. So you can support with that. You can support now. That's why shareholders are satisfied. So we can now go to our answer section and try to support in from that angle. We are now on 3.2. We can just indicate it as trace points 850 cents, which is the issue price, is above the net asset value, which is net asset value of try to identify the net asset value. Remember, I said the net asset value is 695, which is 695 cents. And also on the second part, which you're going to indicate is that the issue price of 850 cents is above the market value per share, which is so if you go back, the market value we identified here is 810 cents. So you can just use 810 cents. So both of them are indicate favorable position. So basically, that's how you can support that point. And then we go to the next one. One of the directors feel that the gold should be paid as soon as possible. Do you agree? Explain two financial indicators with figures to support your answer. So obviously, the loan has to be paid as soon as possible if you've got a higher proportion of loans in the business. So basically, we are saying the gearing, it should be highly geared. So for us to make a decision that the loan should be paid as soon as possible. So that's what we are. That's how we can try to approach that's this question. So we are going to go there and try to see according to the financial indicators that we are given. How can we support that the loan should be paid as soon as possible? So remember, we're going to look at the debt to equity ratio, and also we are going to look at the return on total capital employed and try to see. Remember, the debt to equity ratio is going to uh, identify the proportion of loan that we have in the business. So if we have got a higher debt to equity ratio, it means we have got more proportion of debt in the business. So in that case, we have to pay it as soon as possible. So if you go to our information that we given in the question, let's try to find out about the debt to equity ratio. If you come here, we've got the debt to equity ratio, which is a movement of 0.28 S1 to 0.06 S1. So it's a reduction, which means it's now lowly geared. The proportion of debt became smaller or lesser. So this is what we have. So if you go back to our question, I try to identify what actually the question is saying. It's saying one of the directors feel that the loan should be paid as soon as possible. So it means that the question is saying, do you agree? So in this case, you do not have to agree because the proportion of debt that we have in the business is become lesser. So there's no need for that. And if you look at the current debt to equity ratio is 0.06, is actually showing a lowly geared position. So yeah, on our answer section, we are just going to indicate a such whereby we are saying 3 and 3. So the question of do you agree? Obviously, we are saying no, and then believe that we support. While you are saying no, you say now debt to equity ratio. Debt to equity ratio decreased. Debt to equity ratio decreased from 0.28 S1 by 0.22 to 0.06 S1, indicating low risk. Which means the business is in a position to borrow more money. So this is the explanation that you can give in terms of debt to equity ratio. Remember, we're also going to look at return on total capital employed. So if you go back to our question, it means it is saying quote 2 financial indicators. So the second financial indicator is the return on capital employed. So we are seeing that the return on capital employed is a movement from 14% to 24%. So it has increased Then we look at the recent um, return on capital employed is 24%, and if you compare it to the interest rate that we have here, there is 16%, which is lesser. So if you are having a return on capital employed which is more than our interest rates, it indicates that it's positively geared. So in that position, remember the interpretation of positive gearing is that there are returns that are coming from accessing more loans. So more debt is actually bringing positive results to the business. So basically, that's what we have. So in that case, you can try to explain it on your answer section now as the second point. It's saying return. Or we can just maybe try to shorten it by saying the return on capital employed increased. Remember, it's from 14% to 24%. And this is by 10%. And also, you also indicate that its capital employed is greater. For capital employed in brackets, remember it's what of the current period is 24%. In brackets is greater than the interest rates of 16%. So that's what we have. This indicates positive gear. So this is what we have in terms of the second point, that is supporting on 3.3. Then I will go to the next part of our question, which is now 3.4. We have 3.4 saying shareholders are satisfied with the return on their investment and the dividends they received. Explain and quote two financial indicators with figures to support this opinion. The question is shareholders are not satisfied with the return on their investments. So we need to know which financial indicators should we take into consideration about return on investment. So we are going to look at a return on shareholders' equity, and also we're going to look at the position of dividends per share. So those are the two financial indicators that we should take into consideration when a person is asking you about return on investment. So, but we are given a scenario that shareholders are not satisfied. So it means they should worsen, it should show that they are worsening to prove that the shareholders are not satisfied. So basically, we go to our financial indicators and try to identify that. So we can start with our first, which is return on shareholders' equity. We are seeing that it was 8.6%, it increased to 9.1%. But if you compare it we try to compare it with interest rate on investments, that is on alternative investments, it is 10%. So we are saying return on shareholders' equity is 9.1%, but it's below the interest rate on investment, that is on alternative investments. So basically, in that case, shareholders cannot be because it means alternatively they would have earned more money than investing in that company. So basically, that's what it means. So basically, that's interpretation on return on shareholders' equity. Then on dividends per share, we try to see on dividends per share, we are now yield 45 cents, and they decreased to 30 cents. So basically, we are seeing that it's a decrease, which shows that it's not in a good position. So, and we look there, that decrease, we can calculate the size of the decrease with all the explanation. So we go to answer section and try to come up with our solution from that angle. So we are now saying 3.4. So on the first point, we can talk about return on shareholders' equity. We can say return, which is the ROSH, improved from it improved from 8.6% to 9.1. 9.1%, but 9.1%, which is of the current year, brackets 2024, which is current period, is below the return on alternative investments. And the return on alternative investments you're given it here is 10%. So, basically, and that's how we can try to describe our ROSH, which is the return on shareholders' equity. And obviously, we are talking also about the dividends per share. So, on a second point, we are now saying dividends per share decreased from, in the table of figures, dividends per share, 45 cents to 30 cents. Then the percentage decrease there is 38. It's 33.33%. So we are saying by 33%, whereby you're saying 45 minus 30, you get your 15. Then you say 15 over 45 times that over 1, you get your 33.33%. And 15 cents. So the size is 15 cents. So also this can be also an explanation that explains why the shareholders are not satisfied. So compared to our person, you see that it's saying shareholders are not satisfied. So that's why they are not satisfied. And you go to the next part, 3.5 share capital percentage shareholding. And then they say refer to information C. So try to see about information C. So these are information C. And now our question is, Jabulo and Danford decided that they would combine their votes at the upcoming annual general meeting, AGM. Explain one possible reason for this decision with figures. So if you come here that if they combine their votes, they've got Jabulo on for the current period is 27%, for Danford 25. And if you combine, they will be having 52%. So they will be the majority shareholder. So in that case, they are positive that are there. Those are the advantages of being majority. Those are the reasons that you are going to put down. So we go to your answer section. We are now on 3.1, 3.5.1. So on the first point, we are saying they become the majority shareholder. 52%. And the 52% is this one. And then from that point, you can see that obviously, if you are now a majority shareholder, you now have more control and you make major decisions. They will now make major. We can try to find out other details. They now enjoy more than 50% of the voting rights, because their percentage shareholding is more than 50%. So basically, those are some of the reasons that we can try to put down according to our question, which requires us to quote two financial indicators, which for the question that is on 3.5.1, which is says Jabulo decided what they would combine their votes in the upcoming annual general meeting. Explain one reason for this decision. So they've done that so that they have more control of the business. They make major decisions, and also they enjoy more than 50% of their voting rights. So basically, that's what we put. So on the last part of our question 3.5.2. As an existing shareholder, explain why you would be concerned about the strategy of Jabulo in Tadport. Provide 2 points. So if you are one of the shareholders, you see some shareholders are now becoming the majority, what will be your concern? So that's the question. So obviously, we are concerned about the people that are going to have influence in the decision making to make major decisions. And that's your concern. Are they able to do that? Do they have the ability? Are they qualified to do that? That's some of the questions that you're going to ask yourself as one of the existing shareholders. So basically, are you secure in terms of your investment that you made in that business? The people that are going to be the decision makers, can they be trusted? That's the case that we have. So we go there and try to bring down those typical points. 3.5.2. So I want the first part. We can talk about the skills and knowledge of the majority shareholder. But also quality of their contributions. Because obviously, as one of the existing shareholders, what you want is a positive results for the business. You want the business to prosper. So is that possible with the majority shareholder? That's the question. So quality of their contributions also can be also of paramount importance. So these are the points that we can try to bring in, and all correct questions also will be marked correct. So this is what we have, guys, in terms of interpretation of financial statements. And this is a question that we're looking at from the question paper of Common Test March 2024. So let's stay tuned for more videos to come. More typical examination questions will be uploaded on this channel. So let's subscribe and share. Let's share the link to our colleagues who are doing great Cove accounting. We'll meet again in the next video. As for this video, I'm out.